Good morning, good afternoon, good evening, and welcome to the Tuesday, the 25th of January, Bull versus Bear daily meeting in here with Steve Miley on the call for trade day. Well, welcome everyone. We're going to go for our usual regular run through in here today. Take a look at the calendar, what we've had, what we've got coming up, what are the main macroeconomic geopolitical events that are impacting markets right here, right now. And then we're also going to take a look at the charts and see what's going on the charts. As you can see live now, click to watch. So this is where you find us on the revamped trading room. Now, I just want to give you a quick whistle stop tour around this again. Went through it yesterday. We launched this over the weekend. So the new redesigned trading room in here with Trade Day. So in here you can obviously go straight to the Tradeovate trading platform in here. Just launch the trading screen from here. And remember to log in using simulation. If you want to watch the live morning meeting, it's at 6:30 Central Time, 7:30 Eastern Time US, and then that is for me here in the UK, 12:30 UK time, and 1:30 for Central European time. So yeah, take a look at that. Click through there, and if you don't catch it live at that time, it's usually about 20 to 30 minutes the webinar. If you don't catch it live, it is available here to watch on a record for the day. The data release calendar is in here. If you want to see the full calendar and pop it out, you can just click here. But if you can just you want to stay on the trading room, you can see and just scroll through the calendar there. And then below here we have the live squawk, live market commentary. So this is a really good addition. If you're not using this, please do start to use this on the free trial. You just click in here to start the audio, and you get a live commentary of what's going on in the markets as data comes out, as news comes out. You get that live. My market chart is technical analysis reports. You won't see this bit in here. This is for me to upload into, but you'll see this bit here. You can see the technical analysis reports, the last few reports in here. Just click on these to download the reports. And then you get little heads up stuff in here. That's things that are going on the site or anything that you should be aware of. Futures rolling, contracts rolling forward, set site redesign, all sorts of little bits in here. Trader quick tips in here to take a look at. And then we get the scrolling news feed in here as well. So a redesigned trading room. Please do take a look at that, and a slightly redesigned as well evaluation dashboard in here. Once you are actually a paid member, trade day in here, you'll be able to see all your details, and then also of the evaluation challenge and all the rules, etc. in here, and a guide to the evaluation challenge on the evaluation dashboard. You won't see anything in here if you're on the free trial. This is only once you're gone beyond that. And then in here in trader education, we've got all of our free courses and also our other courses in here. So you've got all these courses. Please do take a look at these. We've put quite a lot of stuff in here, guys, from just stuff around trading desks, futures contracts, starting trading, setting up the platform, but also some more in-depth stuff to help with trading, introduction to technical analysis, fundamental analysis, risk management, and the psychology of trading. So there's a lot in here. So please do take a look at all of that stuff if you're either on the free trial or if you're one of our paying members. Okay, let's get on with the webinar in full. So on the data side, it's very light data in here today. The Fed do start their meeting today, but obviously we don't get the results of that meeting, don't get the press conference, the statement, etc. until tomorrow on Wednesday. But today, the only real thing of standout was the German IFO survey. This is an important business climate index, comes out of Germany. It is much watched within Europe, and that came in slightly beat expectations. But really, right now, unless we have some real big headline data, such as something like CPI or some, US retail sales data, all eyes on this week is going to be on the Fed. We do have consumer confidence out of the States later this week, but I mean, really, all eyes. Consumer confidence later today. Sorry, that is going to be something worth noting. That's at 10 o'clock Eastern time today, 9 o'clock Central time US, and then that is going to be at 3 p.m. This afternoon in London time, 4 p.m. if you're in Europe. So there is that. So we do have that piece there. That could have an impact in markets, the consumer confidence data, to see how the consumer has weathered January, given the rise of the Omicron variant throughout the globe and also in the US. And also, given the potential for rate hikes, and also the sell-off in the equity markets, has that damaged consumer confidence? So that is going to be interesting to keep an eye out for this afternoon. Let's go and take a look at Bloomberg's 5 things that you need to know to start today. Now, let me just go back and just duplicate this slide in here and actually go back to the Bloomberg homepage. And you can see you can sign up for this 5 things to start your day in here. On the homepage, Bloomberg.com, it says Europe there. It doesn't have to be Europe. But if you just go to Bloomberg.com, whatever region you're in, if you go over here on this right-hand side, enter your email, and you get this in your inbox every day. I do post it on the site. It's the only free resource you get because all of this is now paid for. A couple of years ago, all of this was free on Bloomberg. Now it's all a paid-for subscription. But you do get a good little summary in here. Get it into your inbox so you can see it here, 5 things to start your day. So really, very much in focus at the moment is the concerns around the Ukrainian-Russian border and potential for some kind of conflict to break out there. Nothing happening as yet. Diplomatic efforts still ongoing in here, but we have seen European and US say to their people to be getting out of Ukraine, and that is still of ongoing concern. And also then the path of interest rates. Obviously, we're not going to get that until tomorrow, but that's going to be very much watched. But that's a story really for tomorrow. Crypto's back in focus in here, given the big sell-off we had. We did have a deeper sell-off yesterday and then a rebound, but nevertheless, still looking very, very negative at the moment in the short term for crypto and Bitcoin. And then here, just a really little recap on what's really happened. So what we had yesterday, we had that big sell-off yesterday, right? So we had the big sell-off, so in here, Wall Street, and then a big rebound. Wall Street reverses, ends higher in late session rally. So if we go and take a look at what actually happened in here, let's see, make sure we've got the US on here. So no European there. Let's take a look at the US stocks. So if we look at the US stocks on actually the closes, this is the cash markets, only down. The Dow's actually up nearly 1/3%. The S&P 500 was up, and just over 1/4%. And similarly, I haven't got it there on the Nasdaq, but it was similar for the Nasdaq, pretty much unchanged on the day. Having the Nasdaq at one point was nearly 5% down, and we had plus 4%, 3 to 4% down on the Dow, the S&P, and a really strong intraday rebounds after that. Further capitulation. It did feel like capitulation. Very aggressive sell-off. We had no overnight bounce that we'd seen previously. We had the big sell-off last week, and we can take a look at that if we just go to I'm going to jump to the chart in here now. So this is the 1 hour. There's the sell-off and the rebound. Big sell-off and a big, really strong rebound in here. This is the 1 hour chart on the S&P 500, and that was pretty much in the last 2-3 hours of trading. Big rebound from 6 through 7 o'clock, and then right in the last hour of trading, 8 through 9 p.m. in here, Eastern time, that's London time, 8 to 9 p.m. London time, a really, really strong rebound. That's going into the US close to 5 p.m. 4 p.m. close New York in here. Okay, so a really aggressive rebound in here on Monday, and then since then, the market hasn't been fully able to hold on to that. We've had a significant dip back lower, and we see that they're covering here on Reuters. Futures fall ahead of the Fed meeting, corporate earnings. I will come to the corporate data calendar as well in here in a second. And European stocks, if we look at what European stocks are, so European stocks pick up, risk appetite hurt by it. But what we've really seen in here, if you go and look at Europe this morning, so we've seen European stocks, yes, they're up. Remember, these are closes, from in London time would be before and European time before. This is only at 4 or 5 p.m. Around lunchtime in here in the US, so it doesn't pick up all of the late rebound we had. So these rebounds in here are really just echoing the rebounds that we saw late in the session, and equally the futures markets, because the futures markets, their marked close, their settlement price is at the cash market closes, right? So these are up, but they're only up, and if we go and take a look, the markets are higher, but only back up to where not as high as where they were the previous session on the European stock indices. So the rebounds in here, so the futures are falling in here this morning. So we go take a look here. Futures fall ahead of Fed meeting, and if we can see that on the chart. So S&P 500 had that big sell-off yesterday, and we'll take a look at it on the daily chart. Huge sell-off and a huge rebound. And this is a really aggressive. This is either a really aggressive like hammer pattern, or you could class it as a really strong dragonfly doji, which is a really strong bullish pattern. You can see it undercut these lows in here, which were from October of last year, undercut the October lows and got right down and just got really close to, not quite down to this swing low in here. Excuse me a second. This is from July. So the low there on the Nasdaq from July Let me just make this a little bigger. The low here from July was 42.15, and yesterday we got down to here. Excuse me, this is on the S&P, not the Nasdaq. The low here was 42. Actually, just undercut it. 42.12 and 3/4. Just undercut that low there as well. 42.15 the low. So it did just undercut that low there, and then a really strong rebound. So a strong, either really super strong hammer candlestick or a dragonfly doji, both of which are really bullish, and echoing that on the Nasdaq as well. So the Nasdaq in here plunging down through lowest point in here. Well, you can't really see it because it's the futures contract, but its lowest point really since back to June of last year. Okay, so really negative, May, June last year. But then that really strong rebound again in here for the Nasdaq. So another hammer or a dragonfly doji candlestick in here, really bullish rejection after this big sell-off from last week. And remember now, we're down nearly, we not quite got 20%, but we're down nearly 20% from the highs in here. So a significant sell-off in here, really negative. But then this really strong rebound. But the sell-off this morning, look, the overnight sell-off is really a bit worrying. And we're going to take a look at that. That's going to be, I think, the really main feature of the day. How much of this rebound from yesterday can the markets hold on to? And if I step into, let's start with the Nasdaq, because it has been kind of one of the drivers in here. What I want to see is this to at least hold the 50%. It wants to hold halfway. If you think of this, a lot of when you have these really elongated candlesticks, if you get like what's called a Marabuso candlestick. So a Marabuso candlestick is when the market opens and closes near the same level. So a big down day like that, that's like a Marabuso candlestick. The one we have today is like a Marabuso candlestick. So even though we didn't get a Marabuso yesterday, the support for and resistance for a Marabuso, when you get just a great big strong bar like this one here, this long red Marabuso. So the resistance on that bar would be 50% back up into that bar. So you could look at then the 50% retracement of this rebound yesterday is going to be really important. So if I can zoom in on that and come in here, and we go to our drawing tools, and we go to a Fibonacci retracement, and we go from the top to the bottom in here. And what we'll see is the market's holding above at the moment. We're holding above that Fibonacci retracement here, which is coming in around here on the Nasdaq around 14,120. Okay, so around 14,120. And we've held above that. Whilst above that 50% retracement, I'm willing to give the market in here a benefit of the doubt. In fact, I'm going to step in, if it allows me in here, I'm going to step into the 30-minute chart, because you've also got some other support in here. If you look around the 30%, you've got to the bottom of this impulsive candlestick, around the 61.8, some important support as well on the short-term chart. But I think minimally, whilst holding above there, we can kind of hang on to the bullishness from the rebound, okay? If we start to give that up again, then this all looks really negative again. So 50% retracement of that rebound, and then the same thing on the S&P, okay? So you can see the S&P, there's the really strong rebound. There's the correction in here overnight. And again, if I step in and go into the fib, and then going from the peak to the trough here, and you can see we're still holding above that. That's going to come in around 43.11. Okay, so whilst holding above there, I think we'll give this rebound the benefit of the doubt, and there is risk back to the upside. If we start to break down through here, or even you might be more aggressive if you go just down through the lows, the overnight lows. If it starts to break down through there on the cash market open, I think that it's a little bit binary going into today. It's been a little clearer, obviously, with a big sell-off over the last few days, but and from last week. But right now, with this big turnaround rebound that we saw yesterday, with the strong dragonfly doji, with the strong hammer candlesticks in here, whilst we're holding on to support, and I'm defining support, and you could actually here we're kind of holding at the 38.2% retracement in there, so we're holding at that really. It's actually holding above the 50%. We have had a couple of forays below the 38.2, a couple of dips below, but kind of trying to hold that 38.2 whilst it's holding the 50%, going to give the rebound the benefit of the doubt. But I would still wouldn't be buying this until it broke above, not maybe the high from yesterday, but the overnight high here. So on here, that's up at 43.83. If we start breaking back down even below the overnight low, 43.65 and 3/4, or the 50%, as we said, around 43.11.10 area, then this looks a lot more bearish. Okay, if it breaks above the overnight peak in here, this swing peak in here that we had earlier this morning, then I'm probably looking for this to push back high and then retest not just the high from yesterday, the rebound high from yesterday, but even push back in all the way back up here. We could be as we look as bargain hunters come in. But how many bargain hunters are going to come in ahead of the Fed? Probably not too many. So this is likely to stabilize now. The market's now likely to stabilize through today's session. We're probably not going to see it back down to the lows in here. We're probably not going to see it all the way back up in here. It's probably going to be hovering somewhere between 44.50, I would say, and 4300, maybe down as low as 42.80 in here, going into the Fed tomorrow evening. And then the breakout really from these overnight highs and lows, or maybe that 50% retracement. And the same thing for if we go in and step into the Nasdaq, it's the same thing in there for the Nasdaq in here. Whilst holding the 50, we stay bullish. If it starts breaking below the 50, it looks more bearish. If it gets back above the overnight high, so the overnight high there, 14,378.5. If it gets above there, then it's looking back up to the peaks here and maybe up towards 14,800, all the way back up to here. So a little bit binary, looking for the next step, and we're probably not going to get any indication of that until after the cash market opens at this in what we've got about just under 2 hours time. So really wait for that cash market open. We'll see what the first 30 minutes of trading brings us. Let's step across to the commodity markets and have a quick look at those. So oil in here. We have turned a little bit more negative on oil. We did get that dip and a rebound back on Friday. An erratic kind of session in here yesterday with the market pushing lower, rebounding as the stock market rebounded. But look, again, with the stocks lower in here again today. So this is pointing lower for me. And if I step into the 1 hour chart, you can see now we have a succession of lower lows and lower highs, okay? And the market rolling back low. This looks more negative. This looks like it can easily, I'm happier being short here than I am maybe on the equities right now. And this could easily look like it could retest the lows from yesterday down at where are we? The lows here from yesterday, 81.90 and deeper, maybe towards $80. This could be down to today. So happier with a short there on oil. Let's take a look at gold first of all on the daily chart. So gold hanging in what I would call a high level consolidation after that impulsive move we saw last Wednesday. I think Wednesday it was. Then we marked time Thursday, Friday, dipping another rebound in here yesterday, dipping another rebound in here this morning. Hold a gun to my head. I'm playing this from the long side. Looking to buy any kind of dips in here and looking for the next up leg in gold. And that's kind of reinforced by the fact that, or not reinforced, it's I think one of the things hampering gold going higher is the dollar. And we've been talking about the dollar. The dollar continued to go higher again in here this morning, looking strong. Forex Live talking about that in here today. Dollar firms ahead of North American trading. Euro versus the dollar falls to a 5-week low. Pound versus the dollar to a 3-week low. So this is all euro versus dollar. The Kiwi versus the dollar actually yesterday and this morning has gone to a multi-month low. Okay, the New Zealand dollar versus the US dollar. So all of these markets going and the dollar strengthening against most other currencies in here, and you can see dollar index significantly higher in here today. And that I think is hampering the gold moving higher, because usually a stronger dollar is negative for gold, but dollar staying strong in here. Gold staying strong in here because of its a safe haven, right? It's the classic safe haven. So gold staying bid on its safe haven basis, but not really able to properly rally because of the strength in the US dollar. Okay. I'm going to wrap it up there, guys. Keeping an eye out for anything we get, obviously, out of diplomatic solutions regarding Russia, Ukraine. Anything positive on that side is going to see these stock markets surge back higher, I think. So you're really watching for that. And obviously, anything negative on any kind of skirmishes, any kind of outbreaks, that's going to be super negative in here. So watching out for that. On the calendar side, we do have consumer confidence from the US at 10 a.m. Eastern, 9 a.m. Central US time today, 3 p.m. London time. Oh, and I did promise a quick look at the earnings calendar in here. So let me just bring that up in here. And so the earnings calendar for today, and again, we go into the filter in here for the earnings calendar. We only want to be looking at the big stuff, what's important in here. So I go step in and we tick 3 stars. So this is just the more important stuff, the bigger stuff. And then right at the top, if we look in for today, we have Microsoft. That comes after the bell. So after the close this evening, we get Microsoft. We've already had Johnson & Johnson missed on revenue, just slightly beat, but pretty much in line on the EPS earnings. Slight beat for Verizon on this morning already on the revenue side and also on the EPS side. And you've got some others in here, kind of mixed bag, generally better than expected. General Electric, slight miss in here, miss on revenue, a beat on its EPS, on its earnings per shares. So yeah, a kind of a mixed bag, but mostly green in here, as you can see, for most of the reporters so far. Microsoft is going to be the one we're really watching out for today, and that comes after the market close. I'm going to wish you all a great trading day. Please do stay safe out there. Join us tomorrow on Wednesday for another Bull versus Bear webinar. Till then, have a good one.